Ever feel like your savings account is just sitting there, earning barely enough interest to buy a single coffee a month? Yeah, same here. So, what if I told you there's a smarter way to put your cash to work, without diving headfirst into risky stocks or locking it up for years? Let's talk about 8 easy-to-understand ETFs that can actually replace your savings account. These aren't complicated or scary. In fact, they're designed for people like you and me who want higher returns, but still want their money accessible and safe. First up are the ultra-short-term government bond ETFs. I'm talking about options like the iShares Short Treasury Bond ETF, ticker SHV, SPDR Bloomberg 1-3-month T-bill ETF, that's BIL, Goldman Sachs Access Treasury 0-1-year ETF, or GBIL, and the iShares 0-3-month Treasury Bond ETF, SGOV. All these funds invest in super short-term US government bonds. What does that mean for you? Your money is in one of the safest places possible, backed by the full faith of the US government, and it's still liquid. You can buy or sell any trading day. Interest rates and returns aren't going to make you rich overnight, but they're almost always higher than your standard savings account, especially after inflation. Now, if you want to squeeze out just a little more yield and you're okay with a tiny bit more risk, check out short-term bond ETFs like the Vanguard Short-Term Bond ETF, ticker BSV, or the Vanguard Short-Term Corporate Bond ETF, VCSH. There's also the PIMCO Enhanced Short Maturity Active ETF, MINT, and JP Morgan Ultra Short Income ETF, JPST. These invest in either government or high-quality corporate bonds with slightly longer maturities. The upside? Higher yields. The downside? Just a touch more risk and a bit more sensitivity to interest rates. But let's get real for a second. None of these are FDIC insured. Unlike your regular savings account, there's a small chance, very small, but it's there, that you could lose money. And while most brokers these days let you buy and sell ETFs for free, always keep an eye on those tiny expense ratios. They're small, but over time, fees add up. The bottom line? If you're comfortable with a little risk for a shot at better returns, these 8 ETFs are a fantastic alternative to just parking your money in a savings account. You keep your cash liquid, it works a bit harder for you, and you're still playing it safe. Just remember, do your own research and pick the ETF that matches your comfort level. Like and subscribe for more easy investing tips. Let's make your money work smarter, not harder.